Welcome to Profiletraders. This is Reza. First, let me start wishing all of you a very happy New Year 2016. This year is going to be without any doubt an extraordinary important year because there will be a combination of many things converging with each other. Number one, market has to figure out if the Federal Reserve is in a pattern of hiking rates several times as they usually do. If that is the case, market will be without any doubt impacted negatively by such events. If you really think about it, a 2.2% average growth, which is quite catastrophic for a country who has raised its debt by almost $10 trillion under the watch of Mr. Obama in the office. So we have spent $10 trillion to obtain an artificial 2.2% rate of growth. The Federal Reserve, in its fantasy world, sees the unemployment to be at 5%. However, they do not mention that we have almost 100 million Americans out of 320 or 330 million out of the workforce. If they continue to believe that this economy is in such a roaring mode that they need to cool it down by rate hikes and further rate hikes, market will be very, very badly impacted. On the other hand, if they give us an indication that this last rate hike was nothing but show business and they wanted to prove to everybody that they mean what they say, even though to me it was the stupidest and the dumbest rate hike I have ever seen in my whole career. If that is the case and they indicate that they're out of the picture for 2016, then market has possibly more room to go to the upside. You also have to watch very carefully this year the outcome of the elections. Thank God, thank mighty God, it's the last year of the charlatan in the White House. So we are going to be him out of the picture, and who's gonna come and replace him will also have very, very big impact on the market moving forward. Also, if we look at what happened into the last year from very much so January to January, we remained inside a very, very nasty sideways back and forth with one big drop regarding the Chinese economy melting down, which magically was erased to the upside as if it never happened. So now we are in a stage of yet another undecided pattern formation. As you can see, we are in a triangle that has a rising bottom and a declining top trend line, which makes this triangle called asymmetrical triangle, meaning that there is an equal chance for it to exit to the upside or to come down, break the low trend line, and then retrace a good portion of this last leg up. Now we can definitely come up with some measurements to the upside. If I take this last swing, the length of this last swing up, and I assume that there will be a break to the upside, and I project this whole range from the bottom here, which is roughly 2000, on a break of the all-time high that we have seen at about 2117. If we can break through that, then the upside measurement for this push up should be at 2260 level. That is, of course, assuming that we are able to break the 2120, which we have tried to break a zillion amount of time and failed. On the other hand, if we are coming down and breaking this trend line to the downside and can reject back below 2000, then I am extremely confident that we are going to come down very fast to retrace entirely this whole last leg up, which went from 1863 to 2110 area. So if we do break and reject below 2000, I am suspecting that price is going to come very fast and very quick towards 1900, and then of course this whole retest of 1850 will be in the picture. And if that level breaks at any given time, God bless this market, it will be in a very troubled situation. Because if we are done with this whole orgy of free money, zero rate financing, stock buybacks, all kind of a shame and all kind of a masquerade to keep prices of paper up, if this thing is coming to an end, I can only let you see how much of a potential we have to retrace to the downside. So definitely market is in a area where a big decision will be made, and that decision will be either they are going to break this market through its all-time high for whatever reason. If that's the case, I gave you the upside objective, or this is it, this party is coming to an end and we are going to break below 2000, and in this case we are going to drop towards 1900 and then come down for a retest of 1830, at which point, if broken, there will be a massive amount of trouble in the market. Now let's look at what happened with oil. It definitely was a year of carnage, and for understandable reasons, you had a very strong rally in the dollar. Every time the dollar weakens, it's a negative for, straightens, it's a negative for oil. You have had 3 billion reserves build up, 3 billion barrels reserve build up. That has been putting pressure on the supply side. You have obviously every single emerging market and economy in a slowdown move or mode, including Japan, including China, including all the surrounding countries of China and Europe, South America. Therefore, demand has shrinked. And on the top of it, as we all know, Mr. Obama is going to allow the mullahs to come into the market as well, as early as next month, and inject by about 5 million barrels a day into the open market. And on the top of that, last week the very first tanker of US oil was shipped out of the United States for market abroad. So now for the very first time in our history, US is also allowed to export oil, which will definitely add more oil into the already oversupplied market. But from the downside point, obviously this low of 35.40 is critically important. If that level breaks, one must be looking at the kind of reaction it will bring into the market, because obviously that will create further forced liquidation for whoever is long or is still holding long, praying every night to Lord that there will be a bounce up towards $50-60 in order to bail out. But if we do break that level and there is no follow through to the downside, then we could no question see a little bit of a oversold bounce off of these levels. But for anything to the upside to happen, we need to clear 38.35 to 38.50. If we can do that, we should go forwards for a retest of 40. If we do break the low of 35.30, 35.40, I have to watch the kind of reaction we are getting in order to see if it's a fake break with low energy breakdown, or if it's a real break, if there is a very strong push outside of that 35.40 to the downside. There are a lot of calls calling for oil to go to 20, but there is one thing that I have very much so learned. When you're in a already significant drop that has been taking place, as we can see, we came from $93 down to 37 and went down here at 37. I start to hear people with their suits and their ties being paid to go on TV talking about how oil is going to go at $20. I start to be a little bit cautious, because usually when the idiots that suddenly become geniuses at $37 with their ability to predict a $20 price, while probably at $100 or at $90 they were all on the buy side, probably calling for $150 a barrel, I'm starting to think that possibly the downside is coming to an end, and most likely the ones that at $37 are predicting $20 price will definitely be on the wrong side of the prediction. But it still can happen. Everything can happen, and as a result we need to keep a very close eye on what we will do or not do with this recent low of 35.40. Gold was yet another market that was quite catastrophic for the whole 2016, and everybody that thought this monetary easing from Europe, that printing from the Federal Reserve, possible uncertainty in the Middle East, etc., would bring gold to life. Absolutely no chance. It was a horrible year, and the chart continues to look extraordinary horrible. We do have a little bit of a bottom build up here, where we have tested this 1045, 1050 area, and we did hold. Definitely I can start to see that this becoming significant support. At any given time that this support breaks, then there is really nothing left before we would go touch 1,000. And if I had to guess, that these vicious people that are manipulating the market would be fools not to take that price down just for the hell of it, break below 1,000 to see what kind of a reaction they can create if they wish to accumulate cheap gold on a panic situation created with a break below 1,000. So be very, very careful if you are long, that if that 1046 low breaks, that we could drop one fast quick shot towards 1,000, temporarily and fast break below 1,000 to see the kind of reaction they can bring in, and then possibly from that point on put an end to this meltdown and then a rally back up. On the other hand, if we do not break this 1046 and we support to building, if we continue to build support down here, then buyers should take it up towards 1090, and for a break to the upside we need to exit above 1090 out of this current sideways formation. And if we do that, then obviously we have 1100 and if 1100 is pierced to the upside, we could very fast go up and delete this whole last leg of a very strong reactional move to the downside and possibly hit an upside objective of 1160. So it's going to be a very interesting year to see if we are going to see further meltdown or if we are going to see a potential bounce off of these levels. So happy new year again, wishing you all the best. If you wish to join my trading room, learn market profile with me, you can get all my courses and a 1-year membership to the room for $550, 30 days money back guaranteed from my website profiletraders.com. Have a great one and talk to you next week.